All right, what's up? This your boy E White. All right, so I'm on Trading View. I'm just looking at my account. So I'm just going over this Canadian dollar, Japanese yen um, analysis that I did the other day. But let's go ahead and let's look at the actual um, sentiment. All right, so 70% was short on this trading pair, and 30% was long. So we took a contrarian view on that, and we was looking to go long. So let's go ahead and look at this analysis that was done on February 6th. We also saw a couple of handle, and you always see that I always say potential. I only say potential is because you know it can fail, meaning that price could have went down and it would have made it void. So even though it is shaped up like a cup and handle, for the most part, I still use the word potential because you have to respect the markets can do whatever. All right, I gave the analysis on February 6th. I said currently, majority of traders have been short on this market for the past days. Currently, 72% of traders are selling, so that's a lot of selling pressure. So what we want to do is take a contrarian view, and we want to look to take this to the upside. Now, go ahead and play this so you can see. All right, so our targets have been hit, have been achieved. We're going to update this, and we're going to comment, and we're going to say targets reach closed. All right, targets met with a 130 pip move. Congrats if you took this trade. All right, update idea. I don't know if anybody even saw this. I can't tell how many people have viewed it or whatnot. I know I didn't get any likes on it, so that is what it is. But anyway, stay at it. That's what we do. All right, so let's go and look at some other assets in the market. Let's look at the Australian dollar, Canadian dollar, CAD. So we're on a daily chart. We're gonna do everything. Let's do an hourly. Let's go on an hourly. All right, let's see what's shaping up. All right, we're in a downtrend. And go back and we'll see. All right, here we go. So 81% were long, 19% short. We're in a downtrend. So in this case, what we're looking for, with these moves coming down, all right, we want to be looking for selling. All right, for the most part, we want to be looking for selling opportunities. All right, there's been plenty of ones make it down to the downside for the most part. All right, and this has been playing out for a while. So y'all clearly see we're in a downtrend. We're moving down. Broke out, going down to the downside. All right, so when you see those extremes, that's what we're gonna look for. And I told people before, you want to actually mark up on your chart. You can use the text, and you can put in, 80, 87% short, long, whatever the case. I just made up that number, but you get what I'm saying. You put it on there so you can keep a tab on when day to day has changing, and then you can go back and you can look. So it was 81%. Okay. Let's look at the euro, British pound. Where you at? It might be up here. Where you at? Here we go. All right. So we got 71% that are long, and we want to go back and see euro GBP. All right. So once again, that's why if you look back, look all the way back here. I mean, this is from December the 28th all the way down. We've been basically making higher highs and higher lows. Uh, but you wanna see, that's 71%. I'm pretty sure it went 71% the whole entire time. But for the most part, right now it still is, and we're still making our way to the downside. Now we can start anticipating some trend reversals the bearish side of thing, whenever the bearish side starts to increase. So if this starts getting up to 40% or so, now you're starting to get a lot of people coming to the market, starting to short this thing. And if that's the case, then now you'll be start looking for some longs. But right now, nothing's really changing. Yeah, we got a nice little move to come up here. So I like to play with a box. So we're gonna take this box area right here. All right, and essentially, I want to see if we can go below, finish out this particular trend, take it to the downside, and we also can look at some massive fib levels. So we take our Fibonacci extension tool, and we're gonna measure this whole entire impulse right here, and we're gonna see that clearly based off this particular move, the next target area is the 84,907 region on here. So from where it's at right now, all the way we got about 48, maybe around 50 something pips to get there and then to the next level. All right. And so since we have done that, we also look at overall where we are as far as, let's go on a higher time frame so we can crunch down. Let's go to the 6 hour. Yeah, I like to do some unorthodox areas. All right. So we want to measure from here, and we're going to see what field levels we are visiting on this 6 hour chart. Let's bring it over, and we're clearly back in the. So we're around a 78. All right. Let's see something. Let's do this. Let's go to another. Let's take it from this stream right here. Let's see what we're playing out with. All right. So based off of this level, this is a clear level where price still can come to. If it comes to this level, this is one of the key levels of the 78% retracement. We breached the 72. I'm sorry, the 70, which is this red. You can't see it. But if I move, see this red right here, that's what's right there. But that was the 70 percent level. So it looks like if we are to get some more downside, it'll come down to this area here. And if we get that, looking for some sell opportunities to get here, that's a quick 115 something pips to get down there. So let's look at odd Swiss franc. I'm still on a 6 hour chart. Let's go back down to the hourly. All right. So what we had with them, we had 75% alone. Okay. All right. So yeah. All right. So 75% alone. All right. We see we have we're establishing some lower lows and lower highs. All right. So this right here was a lower high. All right. I expect the price to break this level right here. All right. And we start to establish a little bit of a downtrend. Okay. So we were already had a massive move, from June all the way down. Now let's go ahead and measure this. I use the 6 hour chart. Let's do the 8 hour. You know, and yeah, so yeah, we're doing a lot of. We got a lot of heavy consolidation in here since October. All right, Now, here's the key thing: we haven't made a lower low yet. So this is a real key area that I want to really see broken. That will give me the confidence um, to see if we can go lower. But for the most part, you want to look out for liquidity traps like this. So look at this. What we come down here. All right, this traps all the what? Uh, the bears, right? Everybody going short. They come up and they just wipe out all this liquidity. A lot of people stop losses is up here and just take it out. And then look what happens. Prices coming back and visiting these areas that what once was some form of support that had that was broken and now has become the resistance. And this is just a area to come back to collect unfulfilled orders. All right, they got it, and then they took the market lower. So I definitely want to be careful around here. So just even if it breaks here, I still want to say, hey, it broke here too, and came back up. There's nothing to say that we can get a break, come back up here, and then drop. So you got to be conscious that that's a possibility that can happen. But once again, I draw a box, this little region here, and this is what I'm dealing with. And I just need to see price break out of this box, hold it, confirm it, and see if we get the true price movement that we're looking for. Now I can come in here and I can trade this. Now I'm not going to trade it right now because we're at a pivotal moment of market changeover. Spreads are going to be stupid crazy. So no, but if this was earlier in the day and I saw this, I like the fact that we're getting close to a retest to this area here. And what I would do is I would still pull up my fibs and I use my Fibonacci strategy. Okay. And essentially, uh, I want to see if price can come back above this 23% area. And if it do and it holds, I would look to try to trade it back down to the 61% as a retracement type trade. Okay. Some people, will get in and try to go long, which is fine if that's what they believe. But I still feel like this is still a bearish setup, and it's not to look to go long yet. Right. So I like to trade the Fibonacci levels going back down or up, depends on what I'm trading. So yeah, so I definitely want to wait and be patient based off of my trading strategy. I want to see price come back above here. If it do, I will be looking and see if I can short to go down. And then what I would do is I'd have my stop loss back above here. If it get hit, it get hit. Just keep it moving, right? All right, let's just do. Let's look at All right, let's look at the US30 index. So with the US30, all right, 81% were short. So this has been like this for a few days, guys. 19% are long, and I did make some profit off of this one the other day, taking it. So you see, I had my arrow going up. I had traded up. I expected to go up to these levels, and it did. So I made a few $100 off that. But look at this, guys. I mean, the average person, they look at this, they feel like, man, listen, this is a key area that we all should be what shorting, right? It looked like it's overextended. Let's look over here to the left. See what we got. Well, it could be almost near our all-time highs. Let's see. Yeah, we're getting close to. Let me go up to the monthly. Yeah, we are at. See if some more data come in a little slow. All right, so I went over to all right, so I went on to another capital.com to see what their day looked like. All right, so yeah, this was one of the all-time highs in January of 2022. We basically smashed through all that. And what do you notice? You notice that this probably was a lot of people trying to short at this area, and it just wiped them out. And it's collected all these. Now, with that being said, yeah, we've broken. All right, if we don't establish a true dominance to keep going, eventually, yeah, this may run out of steam and we could roll over. Yeah, that's a strong possibility. Um, and when I say roll over, it's something uh, similar to this. It's nothing that drastic. You gotta understand when you're dealing with these indexes, you're not gonna see a lot of catastrophic drops because you think with pension funds, IRAs, these big huge institutions. It's a lot of capital flowing in, so it's really hard for an index to just be catastrophically destroyed in the market. So for the most part, they're going to make their moves up. And if you are going to be a bear on the index, you definitely want to get in and get out. It's not one of those things. You're going to basically be have more bullish movements on this. But what we saw that there was a heavy right here. Right here, I just click on it. You're going to see a heavy amount of up here. 81% was short and only 19% were long. And what's happening? Price is just annihilated all those people. So I keep telling you to be dark horse investors, be contrarian. You have to think differently. And guess what? Over time, people are going to start learning these things. Sentiment probably will become obsolete in the future, especially when you're dealing with algos and different, AI is getting better and better. And already with Wall Street, most trading is done by bots. So it's not like it's humans anymore. They don't have any emotions. They can just trade. They're basically looking for where is the greatest liquidity. So if all your stop losses are sitting up here, or it's more lucrative to collect your stop losses than paying somebody out, yeah, they want most of you to get the wrong direction because it collects. No different in Vegas. They want more of y'all to lose than win. Every now and then they will pay out more than what they should, but on average they want more people to lose so just a few can win. It's more profitable that way. So it's no different. That's how sentiment is. Like I said, sentiment is not that popular right now because it is what it is. I mean, people with the psychology still fall into the same traps. The market is dependent on that. They don't want a bunch of traders who are disciplined. Okay, let's do one more. Just do some crypto. I'm on Bitcoin right now, Bitcoin USD. All right, so we have been inching our way up here, making some little highs for the day. All right. Now we clearly see that we've been up, and since basically January 23rd. We're inching up higher. Now here we go. Let's just look at the last 4 hours. All right, and in the last 4 hours, look, we've been majority short. So 87% have been short in the market on Bitcoin. So, all right. So 1, 2, 3, 4 hours while we're moving up. All right, and then if I go back, let's see what it's been. Basically, let's go to the last 24 hours. All right, so majority once again, 66% are short for last 24 hours. But you look what's been happening. Last 24 hours, we've been, this since Wednesday. What time is it, man? It's like 5:10 right now. So, all right, so this is 5 o'clock yesterday. All right, and we at 5 o'clock basically today. Look at this body of work. Let's use this. All right, look at that body of work right there. Do that look like we dropping? Look, 66% just got ate up that are going short. Thank you. Once again, majority you got to lose. Thank you. Same game over and over. I'm gonna tell you right now. We got a small window. When I say small window, we probably got a good maybe 3 to 5 years This may not be the same 35 because the markets get smarter. We might be dealing with something totally different after that. You're gonna have to understand that these markets are deceptive. It's manipulated by a lot of factors that you don't know about. And with that being said, you're gonna you're gonna have to adapt. You gotta understand. Every time I take a trade, somebody's trying to take me out. There are wolves out here for real. They're hungry. So your capital is like food for them. They have to eat. And then if they feel like they're about to be starved, they do things to attract you. They put shiny objects out. They make things, they want to grab the crowd. They want them to come in. What do you think is about to happen with crypto? Right? When they want something, they want to make sure that y'all leave, get out, to make things difficult. Price drops, everybody goes crazy. Oh my God, it's over, it's done. And then what happens? They start gobbling up everything that you left, you thought was worthless. And then they're gonna make this market really, really, really go. And by the time they do that, they're gonna sell to you at a higher level. They're gonna repeat this process over and over. So the same concept is gonna always happen, but it's just gonna be different ways it's gonna happen. We just got to be aware of it. Once again, not so you. They don't make money off you being sophisticated and smart. They really don't. That's why they call it dumb money, irrational money. This just doesn't make sense. All right. So you've seen some of the sites I use. You go to client. Let me see, Forex client sentiment. All right, Forex client sentiment. Go ahead, take a look at that. And then, of course, we use Coin Glass as well. So we use the liquidation. You can see. You can look at open interest. You can options. That's another thing too, especially when it comes to crypto markets. Man, a lot of it is now predicated upon the derivative side. Derivatives really what moves both markets: stock market, crypto doesn't matter, even forex market. The outright buying and selling, I mean, that's okay. But it's derivatives, the leverage side. In fact, that's how the Great Depression came about because people were over leveraged. That is how most catastrophic events happen in financial industry in economies throughout the world. How do we have a real estate crisis? When most people are what? Over leveraged, meaning they owe more money, you know what I'm saying, on their homes, and then they may have a disruption in pay, loss of job, wages, or whatnot, and then they go under. They're underwater, you know. So start doing fire sales and things like that. So you got all these commercial properties that have got impacted big time through 2020, that thing that happened in 2020. And now you have a lot of empty commercial buildings, and people are now working from home or they're doing a lot of stuff. So a lot of corporations are getting hit hard, and it could be defaulting on a lot of those things. All right. So I wrap this up. It's your boy E White. I hadn't done a video in a long, long time, but here we go. I hope you enjoyed it. Hit the like button, subscribe. It's your boy E White. I'm out.